Hey guys, what's up? My name is Aayush Khanna and you are watching our channel Aayush Khanna classes. In today's lecture, I'm going to start internal reconstruction for both IPCC old course and intermediate new course. Okay, now let's start. Internal reconstruction is governed by Section 66 of the Companies Act 2013. Firstly, what is the meaning of what is the meaning of internal reconstruction? First, I'm going to discuss this. Okay, for books for this is only one and only practice manual, whether you are an old course or even new course, practice manual and a study material only, and no other book than that. Okay, what is the meaning of internal reconstruction? Firstly, internal reconstruction is the procedure in which a company can write off its debit balance in PL account out of the contributions made by the shareholders, financiers, or any creditors. Okay, the companies have been incurring losses from the past few years, so they have to do internal reconstruction in order to write off their losses, where the internal reconstruction of the companies is done. Amalgamation cannot take place, and where amalgamation is done, internal reconstruction cannot be done. Okay, so these are separately two different things. In the exam, whether you are in old course or new course, one question out of internal reconstruction or amalgamation will surely come out of these two options, and it is expected a big question of 16 or 20 marks. And internal reconstruction is a very easy chapter. You can score at least 80 to 90% of the marks of the question. Okay, and let's start. I hope you are clear with the meaning. Internal reconstruction is the procedure of a company in is a procedure in which a company can write off its debit balance in PL account out of the contributions made by the shareholders, financiers, or creditors. The a company has been incurring the losses for the past many years or the past few years or in this years, so internal reconstruction takes place. Okay, now let's write the same. As per the provisions of as per the provisions of the Companies Act 2013. Companies Act 2013, internal reconstruction is the procedure. Internal reconstruction is the procedure by which a company can write off by which a company can write off its debit balance in PL account. Its debit balance in PL account. out of the contributions out of the contributions made by the shareholders made by the shareholders, financiers, or creditors. Okay, the entire procedure would be recorded in the nominal account, recorded through a nominal record. Yeah, please don't don't judge my writing as my here the digital pen is not working properly. Through a nominal account that is reconstruction account. Okay, now let's now see the next part. Whenever at a time of reconstruction, the revaluation of assets take place, and if the market value becomes higher than the book value, in that case the entry would be assets to reconstruction account. Okay, if the market value becomes higher than the book value, but if market value becomes lower than the book value, then in that case the entry would be reconstruction to a to assets. Okay. If any shareholder or any type of liability have decided to forego the some amount of liability, then in that case the entry would be liability to reconstruction. Whenever it seems that there is something profitable to the company, if whenever it seems that there's anything profitable to the company, reconstruction account will be credited. Reconstruction account will be credited. But if there's any type of losses uh, transactions, then in that case reconstruction account will be debited. Then in that case reconstruction account will be debited. In exam they can the examiner may ask to prepare journal entries and balance sheet only, and balance sheet of the company. Whenever you will make the balance sheet, you will write the balance sheet of let's say ABC Limited, and in bracket you will write and reconstructed. Okay, you will write what? Balance sheet of ABC Limited and reconstruction and reconstructed. Firstly, you have to prepare journal entries. What is mandatory to prepare? Journal entries. Second, reconstruction account, and bank account, cash or bank account. If there is any transactions of cash and bank. And third and the last, balance sheet and notes to accounts. If the question asks for this, then only you have to prepare balance sheet and notes to accounts. Otherwise, you just have to prepare the step 1 and step 2. Okay, in reconstruction account, there would be a balancing figure that will be capital reserve only. Whether it can be credit balance or debit balance. The only thing that will come is capital reserve. In reconstruction, you have to write off all type of uh, losses, any miscellaneous expenditure which is given in the balance sheet of previous year, and every type of intangible assets, every reserves, losses, and what reserve, losses, and intangible assets, and any type of miscellaneous expenditures. Okay, let's say discount on issue of debentures. Okay, that is our miscellaneous expenditure, which is provided in the asset side of the balance sheet. I hope you got it. All type of intangible assets, our trademarks, patents, copyrights, goodwill, these things. Okay, now let's start with the question. I'll be solving question from practice manual of old course paper number 5, advanced accounting, page 4.94, page 4.94, question number 8. I'm going to solve. I'll be preparing I'll be preparing journal entries, balance sheet, reconstruction account, and bank, so that you are clear with your concepts. Okay, I hope you all are having your practice manual with you. Okay, if in the question it is specified that the intangible assets are to be written off, and losses are to be written off, then you have to write off. If it is not specified in the question, then also you have to write off. Then also you have to write off. Okay, now let's start with the question. The draft balance sheet of Y Limited as on 31st March 2013 was as follows. Okay, we are given with balance sheet. Preference dividend is in areas for 3 years. Okay, A holds 10% first debentures for rupees 4 lakh and 10% second debentures for rupees 6 lakhs. He is also trade payables. He is also holding trade payables. I think I forgot to write the word. Uh, he is also holding trade payables for rupees 1 lakh. B holds 10% first debentures for rupees 2 lakhs and 10% second debentures for rupees 4 lakh, and is also holding the trade payables for rupees 50,000. Firstly, in if this type of question comes, then first step would be what? Statement showing settlement of liabilities of A and B. Statement showing settlement of liabilities of A and B. How what? Statement showing settlement of liabilities of A and B. A, B. He is holding. They are holding first 10% debentures, 10% first debentures, 4 lakh and 2 lakh, 4 lakh and 2 lakh. Then second, 10% the second debentures, that is 6 lakhs and 4 lakh, 6 lakhs and 4 lakh. 10% second debentures, 6 lakh and 4 lakh. The next trade payables, they are holding how much? 1 lakh and 50,000. 1 lakh and 50,000. Total is 11 lakhs here and 6 lakhs 50,000 here. I think the calculation is same here. 4 lakhs, 6 lakhs and 1 lakh 11 lakhs. Okay. 2 lakh, 4 lakh, 6 lakhs and 50,000. 6 lakhs 50,000. Now let next step. In the books of Y Limited. First step. Now let's see our first adjustment. The following scheme of reconstruction have been agreed upon and duly approved. All the equity shares be converted into fully paid up equity shares of rupees 5 each. Equity shares are given rupees 10 each, 5 lakh equity shares. That is rupees 50 lakhs. So first entry would be equity share with capital account debited. Equity share capital of how much? Rupees 10. Account debited. 2. Equity share with capital account amount rupees 5 each. The balancing figure would go to reconstruction account. Being shares of rupees 10, equity shares of rupees 10 converted into rupees 5 each. Amount would be 50 lakhs is here. The pen is not working properly, so please don't mind. 50 lakhs and here it's 25 lakh. And the balance 25 lakh would be here. Okay. Second entry. Second adjustment. The preference shares be reduced to rupees 50 each and the preference shareholders agreed to forego their areas of preference dividend in consideration of which 9% preference shares are to be converted into 10% preference shares. Okay, the entry would be 9% debenture, sorry, 9% preference shares account debited to 10% preference shares to 10% preference share capital to reconstruction account. In some books or in study material, that is in some questions you may find the words capital reserve, sorry, capital reconstruction. Okay, you may find the words, so it is the same as reconstruction, only the name is changed, it is but same as reconstruction converted to 10% preference share capital. 20 lakhs, 10 lakhs, and 10 lakhs. Okay, Mr. A, third entry now. Mr. A is to cancel 6 lakhs of his total debt. Third entry. Mr. A is to cancel his debt of rupees 6 lakhs, including interest on debentures, and to pay rupees 1 lakh to the company and to receive a new 12% debentures for the balance amount. Okay, the entry would be, you have to make one combined entry for the same. There can be two entries, but for saving of your time, you have to make only one entry. The entry would be a 10% first debentures account debited. First debentures account debited, that amounts to 4 lakhs. 10% second debentures account debited, that is 6 lakhs. Trade payables account debited, rupees 1 lakh. Then interest on debentures, the total interest would be 4 lakhs plus 6 lakhs, that's 10 lakhs into 10%. Oh, that comes out to be 1 lakh, I suppose. Then bank account debited 1 lakh. Bank account debited, that is 1 lakh. 2 12% debentures, 12% debentures account to reconstruction account. He has cancelled his 6 lakhs of debt. 4 lakhs, the 12% debentures would be 4 lakhs plus 6 lakhs, 10, 13 lakhs, 7 lakhs. Okay, I hope you got it. Being depth of rupees 6 lakhs of A cancelled and issued 12% debentures for the same, for the balance. Then fourth entry, Mr. B is to cancel 3 lakhs of his total debt including interest on debentures and to accept new 12% debentures for the balance amount. Okay, so in the same way 10% 10% first debentures account debited, 10% second debentures account debited, interest on debentures account debited. Is doing any payment? No. No payment is done by Mr. B. Then two 12% debentures to reconstruction account. 10% first debentures is of 2 lakhs, then 6 lakhs. It would be 80,000, 3 lakhs here, and the balance would be 5 lakh 80,000, I suppose. No. Sorry. Trade payables. I forgot to write here. Trade payables. I think I've mistaken. Yeah, it says 4 lakhs. Sorry, 4 lakhs, and the trade payables is of 50,000. Okay, balance would be here. It would be 6 lakhs. So 60,000. 6 lakhs 60,000. 7 lakhs 10,000. The balance would be 4 lakh 10,000. I am here short of space, so please write the narration yourself. Then fifth entry. Say trade payables other than A and B. What's the amount remaining of trade payables? Total trade payables is rupees 5 lakh minus 50,000 and 1 lakh. 1 lakh 50,000. It's 3 lakh 50,000. Agreed to forego 50% of their claim. Simple. Trade payables account debited to reconstruction account. Wherever the liabilities are getting lower, every time the reconstruction account would be credited. Being 50% of trade payables cancelled, 50% 1,75,000 and 1,75,000. How this amount came? 5 lakh minus 50,000 for B and 1 lakh for A and into 50%. Okay, 1,75,000 ही आता है ना कि 1,70,000 आता है. Yeah, 1,75,000. Then our five entries are done till now. Sixth entry. Directors to accept settlement of the loans as to 60% thereof by allotment of equity shares and balance being waived. Easy. Directors directors loan account debited to equity share capital to reconstruction account. Reconstruction account being directors loan settled. Amount would be 1 lakh for in director's loan account, 60,000 and 40,000. Okay. Seventh entry. There were capital commitments totaling rupees 3 lakh. These contracts are to be cancelled on payment of 5% of contract price as penalty. In this, we have to ignore capital commitments, the amount of capital commitments, but we have to pay the penalty. What is the capital commitment? It is a future capital expenditure that a firm has committed, that a company has committed to spend a long-term assets over a period of time. Capital commitment is a future capital expenditure that a company has committed to spend on long-term assets over a period of time. Okay, I hope you got it. What is the capital commitment? The entry would be reconstruction account debited. In this, we have to debit the reconstruction account as there's any type of loss. So that's why to bank, as we are paying some amount to bank account, being penalty paid. 3 lakhs 5%. It comes out to be 15,000. Okay. Next entry. Eighth, the directors refund rupees 1,10,000 for the fees previously received by them. In this, many students do the journal entry wrong by opening the account of directors. But we have not to open the account of directors, but we have to uh, uh, do adjustment from the construction account only. That is bank account uh, as we are receiving some payment to the construction account. As there is as this increase in any type of profit being refund made by directors. Yeah, please don't go by the handwriting. The pen is not working properly. Made by directors. Amount is 1,10,000. Okay. Next, our total 8 entries are done. 8 entries are done. Next entry, that is ninth. Reconstruction expenses paid rupees 10,000. easy entry, reconstruction account debited to bank account. At some places you might find the word capital reduction, that is same as reconstruction account, being reconstruction expenses paid. Rupees 10,000. 10th entry. The taxation liability of the company is settled at rupees 80,000 and the same is paid immediately. Okay. Tax liability account debited. As the liability is going out, so we'll debit it. To bank account, to reconstruction account. Being tax liability settled. The amount would be 1 lakh is the provision for taxation. 1,60,000, sorry, 80,000 here in bank account and 20,000 here. Our journal entries are finished now. One big entry is still left. 11th entry. The assets are revalued as under: land and building 28 lakhs, plant machinery 4 lakhs, inventory 7 lakhs, trade receivable 3 lakhs, computers 1 lakh 80,000, furniture 1 lakh, trade investment 4 lakh. And they've also asked to write off goodwill, patents, loss in profit and loss account, and discount on issue of debentures. Okay. Land and building is revalued at 28 lakhs. So that means reconstruction account debited to land and building 2 lakhs, to plant and machinery 6 lakhs. Plant and machinery 6 lakhs, no? Yeah. Then to inventory 7 lakhs पे हो गई. To inventory 3 lakhs. The balance amount would always come here. The over and the above would come. Okay. Inventory done. Then trade receivable 3 lakhs. Trade receivable 2 lakhs. Computers 1,20,000. To computers. To furnitures 1 lakh. The space is finished, so I'm writing here. Okay, the space there is finished. 2. Trade investment it's 1 lakh. 2. Now all the intangible assets. To goodwill 10 lakhs. To patents 5 lakh. To discount on debentures. To discount on debentures rupees 1 lakh. And at last to profit and loss account. It's 15 lakhs. The narration would be being revaluation being a downward revaluation of assets made and and intangible assets and loss in PL account and discount on the issue of debentures written off. Okay, the total 15 lakhs, 16 lakhs, 21 lakhs, 31 lakhs, 32 lakhs, 33 lakhs, 35 lakhs, 36 lakhs 20,000, 39 lakhs 20,000, 45 lakhs 20,000, and 47 lakhs 20,000, I suppose. Please, humble request, check the calculation because I have done orally. It might be wrong. Okay. Let's check. 2 lakh, 6 lakhs, 3 lakhs, 1 lakh 20,000, 2 lakhs, 1 lakhs, 1 lakh, 10 lakhs, 5 lakh, 1 lakh, and 15 lakhs. Yeah, 47 lakh 20,000. Then one more entry would be the very small entry number 12, reconstruction account debited to capital reserve account, being capital reserve created, being capital reserve created. Right here also refer reconstruction account. Okay, reconstruction account. The next reconstruction account. Then keep on checking the amounts. By equity share capital account 25 lakhs, by 9% preference share capital 10 lakhs, by sundries in bracket write Mr. A, that comes out to be 6 lakhs, by sundries B 3 lakhs, then by tax liability 20,000. Okay, by trade payables 1,75,000, by directors loan 40,000, by directors loan 40,000, by bank 15,000, sorry, By sorry, two bank 15,000. Two bank 15,000. By director, the directors refunded 1,10,000. Okay. By bank 1,10,000. Then two bank 10,000. Two two all the assets and assets and uh, that that revaluation of assets and loss rupees 47 lakh 20,000. You have to show here individual assets and liabilities. The last entry which we have done, the big one. Okay, you have to show them here individually. By so the amount here would come to capital reserve as balancing figure. Calculate what's the balancing figure. 25 lakhs plus 10 lakhs plus 6 lakhs plus 3 lakh plus 20,000 plus 1 lakh 75,000 plus 40,000 plus 1 lakh 10,000 minus 15,000 minus 10,000 minus 47 lakh 20,000. Luckily, there's no balancing figure in the question. Luckily, okay. Otherwise, if there would be if there would be a balancing figure, then it would be capital reserve. Right here, nil. Now next part, balance sheet of Y Limited and reconstructed. You have to prepare the note to account also, but I am not preparing here right now. Equity and liability. First, shareholders funds. In this first part, share capital is of equity share capital 25 lakhs plus preference share capital 10 lakhs, and at last uh, shares issued to shares issued to directors 60,000. It would be 10 lakhs 35 lakhs 60,000. Next, non-current liabilities, that is long-term debts. 12% debentures of A and B, that amounts to 4 lakh 10,000 plus 7 lakh 11 lakh 10,000. 11 lakh 10,000. Then third, current liabilities, trade payables. Trade payables, what's the amount? 1 lakh 75,000. 1 lakh 75,000. Yeah, one thing I forgot to make, that's the bank account. Prepare bank account, the banking amount would be rupees 5,000 only. You can easily prepare the bank account it would be the balancing amount, that is balance carried down, would be 5,000, 1,75,000. Then total assets, land building 28 lakhs, plant machinery 4 lakhs, then inventory 7 lakhs, trade receivable 3 lakhs, computers 1,80,000, furniture 1 lakh, investments 4 lakh, and cash and bank rupees 5,000. There was lack of space, so I didn't carry it down. Total 3 lakhs plus 28 lakhs plus 5,000 plus 4 lakhs plus 7 lakhs plus 1 lakh 80,000 plus 1 lakh and 4 lakhs. 48 lakhs 85,000 is the total. 48 lakhs 85,000. Okay. Then next 35600 plus triple 10000 plus 1,75,000. Here the answer is, here the balance sheet is matched. Still not matched. Whoa. See, anything is left or not? Yeah, outstanding liabilities I forgot to write here. Outstanding liabilities of 40,000. 48 lakhs 85,000 total. Okay, here the question is finished. A long question. A long question. Only one topic is left for this chapter. We will cover it in next lecture. I'll be uploading more lectures today itself. Okay. Please share, subscribe my channel, and if you want any other topics lectures also, then please comment down. Then just leave a comment down. I'll be preparing. I'll be uploading all the topics of your request and everything. I'll be also giving you updates, regular updates, and everything. Thank you. Take care. Bye bye.